Hey guys, how's it going? It's January 22nd, and we're just going to talk a little bit about time frames and the differences between day trading and swing trading. If you guys like these videos that I'm making, I'd really appreciate an upvote on Steam and make sure you guys also like, subscribe, and I'll share all the goodies, etc. on YouTube and on Twitter. And I like to tweet some pretty interesting stuff on Twitter just to mix it up throughout the day and try to be different than what other people are doing right now. So definitely give me a follow on Twitter, guys. You guys can find all my information below. So first of all, I want to talk about my lifestyle, and this pertains to trading and time frames, right? So I like to keep a general schedule between 11 a.m. and 7 a.m. Sorry, 11 p.m. and 7 a.m. I like to try to sleep at a normal time, and I don't have to really do anything throughout the day in terms of get up and go to work and drive, etc. So I'm home quite often, but more importantly, I have the time to dedicate to day trading, which requires a lot of discipline, and it requires a lot of not really as much breathing room, and it requires a lot of monitoring your positions and micromanaging it because it deals with risk, right? And just to give you guys an idea, like I don't even tweet 1% of my positions throughout the day for day trading. But for Ripple, I took a lot of positions here. That's just one of the coins that I trade throughout the day. For my main coins that I'm day trading are basically these guys right here right now. I'm looking at ETC, I'm looking at NEO, BTC, not Bitcoin, but that's just to monitor Ripple and also IOTA. So those are the main ones that I'm looking at right now. I'm just getting my other window up here. So yeah, I'm trading, day trading all of those guys as well right now. So I'm taking anywhere from 1,000 to 2,000 Ripple, or position sizes between $2,000 to $5,000, right? So let me explain this to you guys. A day trader will look on very low time frames to try to capitalize on gains throughout the day. So just to give you an example, we might be looking on the 1 minute, the 3 minute, the 5 minute, and the 15-minute chart here. Whereas a swing trader, what they will do is they will look on a much higher time frame. They will look on something such as definitely not 1 hour. I'd say like 2 hours, and up, 4 hours in one day especially, but on much higher time frames. So the difference between a day trader and say a swing trader is that a day trader looks for heavy volatility in the market throughout the day. They look for coins that have really big potential gains. Hold on, I'm just moving my thing over here. They have they focus on high percentage gains or high trading volume, right? So if there's one that has gone down a tremendous amount, I organize my volume right here, right? I look for ones that say IOTA, wow, it's gone down 9%. Is there an opportunity to look for a bottom? Wow, Bitcoin Gold right there, it's gone down 11%. Is there an opportunity to look for a bottom? Has one that gone up really, really high that has a chance to short it as well. So as a day trader, we like to capitalize on small gains throughout the day that can add up immensely, right? So an example would be this guy here, which is a perfect play. So a lot of people will use this 55 moving average strategy of ours, right? Or the ones that I've been talking about recently, where you buy it upon the crossover, say at $1.18, and then you ride it to when it crosses over again. Just an example of a day trading strategy. So you ride it when it crosses over again on a 1 minute chart. So you would have bought it at $1.14, and you would have sold it pretty much right there. It crossed over. You would have sold at $1.31 for a 15-cent gain. Now, 15 cents might not seem like much, but if you're playing a 10,000 Ripple position, or myself, 2 to 3,000, for example, right? Every 10 cents is $100 for every 1,000 Ripple position. So if you're playing, say, a 2,000 Ripple position, like how I am right here, right? I'm playing anywhere between 1,000, like 2,000 on average. So if it's moving up 14 cents, guys, that's a $280 gain right there, right? So once again, day traders, we focus specifically on very low time frames, mainly 1, 3, 5, and 15. And swing traders will focus on much higher time frames. So you guys need to ask yourself, what kind of trader do you want to be, first of all? Do you want to be, or can you be? Are you someone who can dedicate a lot of time to be in front of the computer? It requires a lot of management. It requires a lot of management because we have to watch our positions to know when to add more, and managing our risk in general, okay? There's not a lot of breathing rooms. But for a swing trader, once you have confirmation on a much bigger trend in general, you don't really have to be in front of the computer. You can check up on it throughout the days, etc. But there's not too much to manage. I know a lot of people who hold down full-time jobs while taking many swing trading positions as well throughout the months. But day traders, right? We can focus on swing trading as well, but what a lot of day traders like to do is margin. We margin because it's just a lot easier since we can short as well and we stay in the same wallet, especially on Bitfinex. And then if we're swing trading at the same time, then we just leave everything in our exchange account there so we don't mix up both of them. So please ask yourselves, first of all, what time do you have to allocate and what kind of style do you prefer? Myself, I like volatility, my personality that is, okay? I'm what's the word to describe me? I'm not patient when it comes to I want action, put it that way, okay? I want action. I want to have that continuous feel good moment reward come often, right? There's the kind of people that mine, for example. Like let's say you're mining. Would you prefer one big lump sum or would you prefer small deposits throughout the day? It just depends on the kind of person that you are. I don't really like to wait for one big lump sum as a reward. I'd rather take small gains throughout the day and treat it like a game because I feel like I've done something that people haven't, especially when it comes to scalping, right? And it feels awesome to know, hey, I just made $50 in 2 minutes, or hey, I just made $100 in 5 minutes, or something like that, right? That's an awesome feeling for me, and I like that. I personally love that. I cannot handle swing trading sometimes, so I have to keep both of them on the table at all times, right? I have to make sure that I'm trading because I'm happy with it and I enjoy doing it. But if you guys are the kind of person that basically you have to be able to make decisions very quickly, put it that way, okay? You have to be able to think on the fly. You have to be able to do technical analysis very well if you want to day trade. If you cannot do technical analysis like an expert, you will not be successful at day trading because in order for you to micro analyze everything going on a 1 minute time frame requires some immense critical thinking skills combined with lots and lots of TA knowledge as well. So you have to have a very specific day trading strategy if you would like to be successful at it. So I personally look at the 1, 3, 5, and 15. Now, what are the differences between these time frames? You guys are probably wondering, right? So think of a 1 day candle as just a big picture that is going on. Now, if you want to zoom in to see what is going on in these specific time frames, then go down. So how many 2-hour candles make up a 1 day? So you would get 12 2-hour candles that make up 1 day, or you would get maybe 4 30-minute candles that make a 2-hour candle, right? Or you get 60 1-minute candles that make up an hour. So in this little candle going on right here in the hour, 60 1-minute candles have elapsed. So as a swing trader, you don't really care about what's going on with the 1, 3, 5, 15, even up to maybe a 2-hour. You only care about looking at the big time frames so you can confirm a bigger trend in general, so you can capitalize on profiting throughout the days rather than that specific day only. So I never hold positions overnight as a day trader. The only thing that I will do is maybe put in a limit order to buy something if I believe that it's going to bounce from that specific region. And I'm cool with doing that, and I do it quite often, especially with NEO, like last year, right? NEO, I put in that limit order for $29 and it filled. I'm like, whoa, $29, that's pretty awesome. It was like a 618 Fibonacci level right after that major downtrend, remember? We went up to like 20, down to 26, went up to like 35, and then woke up in the morning, $29 limit order filled. Pretty happy, and it bounced right back up to $36. So anyways, that's the only thing that I would do. But a swing trader, they will hold positions for days, like for up to, I don't know, I've seen some people hold for 3 weeks, right? Just depending on how long the trend is in general. But an investor, guys, they don't care about really what's going on throughout the day. They'll look at it, they'll look at the overlying trend. They'll look at, for example, Bitcoin right here, and they'll look at the weekly chart to see if it's bullish, and they'll try to time it like that, right? On a weekly chart, there's absolutely no reason whatsoever to be selling Bitcoin anytime soon. We're still very, very bullish over the week. Sure, we crossed over right here to a negative a little bit, but we have before as well, and we've always recovered. So as an investor, you got nothing to worry about yet. As a swing trader, you definitely would have sold already. You would have sold already, and you would have looked for a different bottom. So if we want to know what's going on inside of one 5-minute candle, we look inside of a 1 5-minute candle. We look at 5 1-minute candles to see an overall picture of what is going on. So if you want a big picture, think of it this way. You look at the 1-day chart, and now you want to zoom in to get a microscopic view of what is going on, and then you will use a lower time frame. And we use these charts back and forth, back and forth. If you guys have seen my live trading videos, to get an idea of triggers, okay? A trigger chart is basically known as something that will cause a cascade for the other time frames, right? And sometimes it can be a low time frame that could cause this cascade for the big time frames, and sometimes it can the big time frames can cause like a domino effect that will trigger to the lower time frames, right? So for example, if the daily chart is very oversold up here, right, obviously it's going to start down ticking, right? And that will cause a domino effect fall on all these other guys as well to become more bearish now. But let's say everything is really oversold, okay? It's oversold everything as well. Now all of a sudden we would be looking on a lower time frame as a trigger chart, or maybe even a 15 or 30, right? And once we see an uptrend, it might cause like a domino effect to the higher time frames to start cascading over to start uptrending as well. So I use it all interchangeably as well. And what I specifically like to do is I like to look for the 1, 3, and the 5-minute time frames to see shorting opportunities, all right? So what I will do as a trader is I will scan, guys. This is how my normal setup usually looks like on this monitor right here, all right? Every single one here is on a 3-minute time frame as a trader. So this is how my normal setup looks with, imagine a few more monitors added to it as well, all right? So just something like this right here. This is a little bit messy right now. So I will keep my monitor on the 3-minute time frames just like this, okay? Whoops, I gotta go to the end here. Just like that. Okay? I'm looking over here. I've got 3, I've got 5, and I got 15-minute time frames up on other monitors. This one that you guys see right now that I'm just sharing on this video here is only the 3-minute because I find it the most useful. So as a trader, I'm just gonna basically stay here on my 6 coins that I'm watching mainly to day trade. I'm going to look for very oversold regions when it gets there, and then I will look at trigger charts as well to confirm what it is doing. So let's see what we can do right here, okay? I shorted Ripple right here. I think I tweeted it, right? The reason why I shorted it right here was because it was reaching very oversold zones, right? So it's reaching, very overbought zones right here in the 1-minute chart. Now right here, this I would not have shorted here because I would have counted my Elliott wave on a very low time frame here. I would have counted 1, 2, and 3, and this is only the 3rd. I'm wondering where is the 5th wave, right? So I'm expecting one more up like this right here. So I shorted Ripple because on the 3-minute chart it was extremely high. And then what I did was I went to the 1-minute chart as well to see some triggers for charting or for shorting. So I see it right here, for example, extremely overbought already, right? And then I compare it to the 5-minute chart as well, of course, and I see that it's very overbought, and I compare it to the 3-minute chart and I confirm that on 3 time frames it's very overbought. So I'm going to use these 3 time frames as something called confluence. What we try to do is we try to find confluence with other time frames and other indicators to give us more weight for why we are making this decision. Now you have to treat trading as a scientific experiment, okay? Put it that way. You need to be able to formulate a thesis, okay, before you even get into it. You have to make sure you have all your relevant data, and then when you perform the experiment, right, and you see if your thesis will hold, and then you get all your facts, you do the experiment, and then you formulate a conclusion, right? And that's what we do as a trader. What we try to do is look for confluence by looking for more reasons to enter a trade than more reasons and why it would be successful, and we try to compare it to why we should be doing this versus why we shouldn't be doing this, right? So we try to find more reasons to do something and to be right about it that gives us more weight than to not do it. And that's why we enter a trade, right? Because we are convinced of something. We have an idea that it will go one direction, whether we go long or whether we go short. Now that once you have that belief, you need to be able to answer it. If I asked you guys, why did you enter this trade? You need to have a rational decision, okay? You can't just say because I saw everyone else buying the book, right? That's not a very valid reason. A valid reason would be because I feel that this is doing this and this, it has retraced this amount here, it's finding support here, and I believe that it's going to hit this specific target over there. Now, if you don't have all of this information and you find and you haven't done the research to find confluence with indicators that are found all across the time frames, I'm sorry to say, but you're not going to be a successful trader, okay guys? You need to have a valid reason. If someone asked you, why the heck did you enter this position? You need to be able to justify your positions as well, and that's what technical analysis does. It formulates a thesis, right? It creates the foundation, and then you do the experiment, right? And then you prove yourself right or you prove yourself wrong, or someone else steps in and they prove you wrong because they found loopholes in it. So this is why I find time frames one of the most significant things that people really need to understand and need to learn. You zoom out for a really big picture, right? And then you zoom in for a smaller picture of everything going on. Does that make sense so far, guys? So just to give you an idea of a swing trading strategy, okay? A swing trading strategy for Ripple. We'd be looking at the 3-hour time frame. And if you guys actually got into Ripple, it's not loading here. Let me just reload the page and I'll get back to it. So day trading strategies, we rely a lot on RSI or stochastics, is that what it's called, or Bollinger Bands or whatever. So as a swing trader, let's check out this strategy of mine that I'm going to be using to the maximum, guys. And I'm going to be tweeting about it so much, and by the time we're done with it, you guys are really going to understand this strategy, okay? So who cares about numbers? We don't even care about the numbers, really. We just care about the entry point, right? Really irrelevant sometimes. I don't really look at the price a lot. I just look at percentages most of the time. So what we do as a swing trader, for example, is we try to look for a breakout. We try to look for a breakout where it's starting to fan. Make sure you guys are catching up with my moving average strategies because I use it a lot. So we look for it to fan when the yellow line is now supporting all of it below. So we entered at, say, 23 cents. Now we want to sell it when the yellow line is above all of it. And this is on a very high time frame. So we've actually confirmed. Think of a high time frame as an overall trend and a smaller time frame as something that is happening in that specific moment only, okay? Think of it even, I don't know, in some stupid way, like let's say, you know, you're standing on the edge of the galaxy or something, okay? And that's like the daily time frame. Now you're curious, I wonder what the solar systems are doing. Well, the solar systems are within the galaxies, right? So you're just zooming into a little bit of a smaller time frame, and you're like, hey, I want to micro analyze what's going on in that solar system there, of all the planets. I want to see what Earth is doing, and now you're going to zoom into like a super small time frame to see what's going on. So think of it like the games as well, like Sims, you know, or any type of game where you have like real-time strategy, like Civilization or something, or I don't know, like Sims 2000, like where you build cities, whatever it was called, right? Where you can zoom out really far to see everything going on, or you want to zoom into a specific section only. So that is really important to understand. Swing traders, they don't really give a crap, guys, about 1, 5, 15, 30-minute, 1-hour charts. They just want to get the big picture. So let me show you guys the strategy. I'm going to load it up again. I got a little bit segued there for a moment. Come on, load it. I probably am rate limited quite often, I'm guessing. Okay, we're just going to chill there while that does that. Let's see what happens. Sometimes it takes about a minute to load, and because I'm mainly a scalper, right? Sometimes I like miss out on a lot of positions because it just doesn't load like that. I think I'm really rate limited, and I should probably I don't know how to not be rate limited. I mean, I've got so many charts open, it's incredible, right? Okay, it's still doing its thing. Come on. Nope, Still not loading. There we go. All right. So this is my favorite strategy to use, a 3-hour for swing traders. And I highly suggest that you guys brush up on it and check out the material that I posted. So swing traders, we enter right there when it starts to fan out, right? Right here. We enter when it fans out, when we confirmed an uptrend, where the yellow line is supporting all of it. And we will not sell it until the yellow line crosses above it to look like here, where the yellow line is now resisting or acting as a resistance for all of it. So we want this kind of formation. So we buy it at 24 cents about, and then where do we ride it? Where do we ride it? We will sell it as a swing trader where it crosses over. So we would have sold it right around there in this region. So right here, $2.22 about, okay? Now, one would argue, well, we could have sold it up there. There's no way you guys would have caught that top. Not even close, probably, unless you're an expert Elliott wave counter. You could have sold it at 60 cents. You could have sold it at 80 cents. You could have sold it at $1.22. You could have sold it even here, right? So what this strategy does is it guarantees on a very long time frame, on an overall big trend, right? Because here you get a very big picture of what's going on in a 3-hour chart. So now you would have sold it around the 220, and you would have made yourself a very nice profit. You could have sold it there or here, right? But this strategy guarantees that you can ride it to the maximum possible for about a 900% gain there. Now, I like small profits throughout the day, right? Like I mentioned. So swing trading strategy, this is my specific strategy that I will be using. And I can confirm it on any coin, guys, how well it works. Now, you're going to enter a short position as soon as it crosses over to here, okay? On a big uptrend. And would you have closed your short position yet as a swing trader? Nope, you wouldn't have closed your short position yet, because what we want is for it to eventually look like here, where the yellow line is now supporting all of it below. So as soon as the yellow line crosses over as a swing trader, that is when you would know to close your short position. And hey, as a swing trader, you don't really need to manage it. You entered a position from right around here, 230, right? And you don't have to do anything except for just watch for a crossover for days to come, right? You don't really have to manage your risk or anything once you've confirmed the overall trend already. So that's the cool thing about swing trading. It's really good for people who have like part-time jobs or full-time jobs, and also really good for people who don't want to stress as much. The big difference between a day trader and a swing trader is honestly stress as well. You guys might think that it's easy to just sit at home, right? And just, trade all day. As fun as that sounds, you guys also got to see the dark and gloomy side of day trading, right? And I'll tell you guys about it from my perspective, okay? I'm literally an addict. Like, I cannot stop trading. It is gambling. No matter what anyone says, trading is gambling, especially day traders, because we get a taste of those small victories, right? The small rewards that we want to keep doing it. So yeah, you got to also think of the psychological effect of it as well. And as a day trader, I clearly don't get out a lot. You guys see me tweet for 16 hours a day, for 7 hours a week for like 4 or 5 months now, right? It's been a while since not 4 or 5 months, since like November, late October about, that's when I started social media. So yeah, I don't really get out a lot, guys, and you get a little bit socially awkward. Like in person, I'm super socially awkward. You guys try trading for a year full time about now, and see how socially awkward you get if you don't really go out a lot. It's a little bit weird. So you have to think about how it impacts you as well as a person, right? So I like to stay at home a lot. Like, I don't really like to go out in general. That's just who I am. So to me as a trader, I don't mind it whatsoever being a little bit isolated from the world. And we do tend to stick to our own thing, right? Which is cryptocurrency. If you're doing it full time as a day trader, you are going to be very involved in the crypto world. In fact, it might be your only world. So you might find it hard sometimes to stop trading and to find new hobbies, because not only will it become an addiction, but it will also become this massively rewarding hobby at the same time as well, that you won't treat it as work, right? You'll treat it as a hobby, something you enjoy doing, like a video game, for example. I see trading literally as a video game. So I like to trade on, once again, like on the 5-minute time frames, right? So for example, on a 5-minute time frame, I'll employ the exact same strategy. So for example, right here, when the 55 moving average fans outwards right here like this, right here, it's still consolidating, But as soon as here, I don't see it fan anywhere, right? I don't see it really fan anywhere. Here, it fanned a little bit, right? But I wouldn't have been convinced because of the way it looks after the first few bars, right? None of that would have convinced me. I would need to get a nice fan, like not quite there yet, not quite there yet, not quite there yet. That went up. See, that didn't meet my criteria. I have to get a really nice fanning out that's parabolic that will confirm a downtrend. Where is the trend going to start? This one looks like it could be in right here. Almost. Boom, right? The next one was a huge candle. So I would have confirmed it right here on the downtrend. This candle right there, as soon as it closed, guys, as soon as it closed, like pretty much right there, I would have actually entered a short position, right? And then when would I have closed it? $1.34 about, I would have entered it. People would say, wow, that RSI is really low already. Why would you enter a short position from right there? Well, guys, this is the strategy. And then you close it when the 55 moving average supports all of it here. So you would have gone in from a short at $1.34 to $1.20. That's a 15-cent gain. And as soon as it crossed over again here from a major downtrend, fanned out like that, I would have entered into an uptrend, actually. I would have entered into a long position here. And then I would have just rode it from $1.20 to not even yet. I wouldn't have sold it yet because it hasn't exactly crossed over. So there's a lot of different strategies that they use, right? I also use a lot of, like I mentioned, just finding confluence on different time frames. So we try to use all the different time frames to try to find more rational reasons why we think something is doing something. Now, if you look at just a 1 minute time frame, it's actually not really a lot of confirmation for anything, right? Not really a lot of confirmation, but once you can use the 1 minute time frames with 3 minute time frames and 5 minute time frames, if chances are, if it's extreme, for example, right here, okay guys, like this is at 7 in the morning here, extremely oversold. Let's take a look at 7 in the morning on a 1 minute time frame now. So 7 in the morning on a 1 minute time frame, what we can see as well is right here, extremely oversold, right? Right around here. So if we also confirm it on a 3 minute chart, 7 in the morning, we're going to go to 7 in the morning and see what that was looking like in there as well. So what we see is extremely oversold regions as well, right? So that would have been a pretty decent position to go into a long position for a bounce as a trader, right? Because we would have tried to catch it very much so on the bottom. And then let's say we get very lucky as a day trader. And as a day trader, let's say we're finding very oversold zones, extremely oversold zones, like in multiple time frames. Like let's say right here, when we're trading that day on January 22nd, that's just earlier today, actually, 6 in the morning. Actually 7 in the morning right there. And if we go up to the 30-minute time frame as well, we'll see, hey, it's actually oversold in the 30-minute as well. Is it oversold in the 1 hour? Hey, it's fairly oversold there as well. If it's oversold in every single time frame, then there's a chance that there's a very strong likely for a bounce, right? So this was more so a general video just to give you guys an idea of the differences in trading. And always keep in mind that I am a trader, so my TA is more so geared towards traders and swing traders. If you're an investor, long term, I couldn't even begin to give advice or even do a TA properly on how to do that because it doesn't suit my style. I'm more of a sniper, right? I'd call myself a sniper, put it that way, where I find opportunities in heavily volatile markets and I take advantage of them. So I hope I gave you guys a general idea of what time frames are and how they can be used for confluence. When once again, we try to use all these time frames to get confirmation of something that's happening that we believe that's going to prove our thesis that we've formulated, right? So if I had to ask you guys, why did you go into a trade? You guys have to be able to justify, well, because this time frame, the 1 hour is doing this, because the 30-minute time frame is doing this right here, because the 15-minute time frame is doing this, because the 5-minute time frame is doing this. You guys have to constantly scroll back and forth between every single chart. So let's give you guys a breakdown, for example. On a 1-day chart right now, that just formed yesterday, we see a slightly bearish but bullish candle. If this was green, it would have looked really good because it would have indicated massive support there. Because it's red, it still indicates more bearishness than bullishness, okay? Now, if we look on the 4-hour chart, we know that 6, 4-hour candles make up a 1-day chart. So we're going to see throughout the day 1, 2, 3, 4, 5, 6. This is for the new day that hasn't started yet, we'll say. So we know that 6 of these candles make up a day, right? And if we want an even closer look, we want to see the 4-hour. Well, 4 hours, we need 24 candles to make a single day, right? So if we take a look at the all day, it would be ranging just from here to here. So as a swing trader, you don't really see a lot of opportunities in here, right? But day traders could see tons of opportunities in here, and we'll take advantage of all the tiny little swings of ups and downs and up and downs. So on the 4-hour, on the 1 hour, we see that it has gone down, it has gone up, it's gone down, it's gone up, it's gone down, it's gone up. But on a 4-hour, you don't really see any of that, right? You don't really see any of that. You see these tiny little movements here. Now, if you go to a 30-minute, right, you see even more information on what's been happening throughout that day as well. So really, it comes down to what kind of trader you are, what kind of trader you want to be, how much time can you allocate to it, what kind of personality do you have? Do you like big lump sums? Do you like small gains throughout the day? Do you like exposure? Do you like to manage your risk? Can you make decisions very quickly on the fly as well? I do not recommend day trading for anybody if you cannot swing trade yet on a higher time frame, because they're very different styles and you require TA for both of them, right? But let's face it, day traders have to manage and micromanage their positions. They have to carefully analyze the chart every single minute as data comes in, because we have to make on-the-fly quick decisions, right? Swing traders can really take their time and plan things a lot better. So the patience level is really different as well, right? As a day trader, I don't really have a lot of patience because I'm constantly just grinding at it, right? I want to make those quick gains very quickly. Well, I am patient overall, don't get me wrong. But for day trading, people usually don't have that patient of a personality because they want to rush things, right? It goes with their adrenaline-filled personality. Swing traders can just really take a step back. There's a lot of breathing room. They can plan on really big time frames of when to enter, right? So using specifically that I use moving averages, that would have been even here, like, whoa, on the 4-hour, you buy on the 4-hour breakout, sell it right there as soon as it's meeting it, bam, right? And right now you enter a short on the 4-hour time frame, you got no reason to close it yet because it hasn't even crossed over above. So you can think of something like here, you can think of these lines here as support and resistances. You'll see that on a lower time frame, here on the 4-hour, you see it go up and you see it stay below. On other time frames, like a 30-minute, you'll see it go up and you'll see it go down, you'll see it go up and you'll see it go down. So it drastically changes a lot, and you'll see more information of all the heavy moves that are made throughout the day in detail under a microscope. So I really hope that this has put a little bit of perspective into it. And I know that a lot of people are always wondering, like, oh, which time frames do I look at? Well, the answer is you have to look at every of them, right? I specifically, when I day trade, look at 1 to the 15-minute time frames. Sometimes I'll even use Crypto Watch as well when I want to look at like 10-minute, or sorry, Koinogi, or it used to before when I want to look at 10-minute charts as well, right? I'm thinking of paying for TradingView now so I can actually get the 10-minute and an 8-minute chart as well. Very weird numbers, I know, but I want to get 8-minute specifically. So yeah, 8-minute will help me a lot. I think it's just tuning it to the Fibonacci, that's all, right? So 15 is a really good chart for me. Swing trader, once again, probably like a 1, 2, 4-hour, 1-day chart, right? And you want to come up with a strategy. My day's trading strategies will mainly not work for swing traders at all. So you guys, please stick to a style that you think will suit your personality. Stick to a style where you actually can dedicate the time for. Don't think that if you're a student or if you have a full-time job, you can day trade. No, it doesn't work like that. You can maybe swing trade, right? And then you can day trade on your days off when you want to be in front of a computer where you know that you will only hold a position till the end of your trading session right there. So I hope this has given a little bit of insight. It's been one of the topics I've been wanting to cover for a very long time now. But I tried, I think like 5-6 times already, and I just gave up on them, and I made like 2-hour videos for each one. So this time I'm like, you know what, I'm just gonna shoot the crap with everybody and just talk about what's on my mind. And keep in mind, like, I'm no professional, guys. I didn't go to school for this, okay? I didn't go to school for this. I'm not formally trained in any way. But you got to ask yourself, what is a professional trader, right? Is that someone who was formally taught at a school? Is that someone who cannot teach himself? Like, I don't know. I'd say I'm a pretty good trader just based on the profits that I've made and the knowledge that I can also pass on and the accuracy that is held in my TA as well. So regardless of if I'm formally trained or not, here I am trying to pass on information to share what I know, because knowledge is only power if it can be taught and passed on to other people, right? I don't believe in places like Udemy, guys. Like, I've seen their material, I've seen what people offer. They cater specifically to one style rather than accommodating different styles of traders. Here I am trying to show you guys that there are many different styles, and you guys need to develop your own style over time. Trust me, my scalping style is one of the most unique styles that you guys will ever see. It is not done a lot of it as well. We're trading for up to a minute, right? Like super high frequency, we can say. Not high frequency trade. You guys know what I mean, like frequency as in the amount of times that I'm doing it, right? And scalping, it has gotten me to this level because I have now not mastered, but I understand the basics of every single time frame to a very extensive level, and that is what allows me to learn how to scalp, because I now have the skills that can take me to the next level. So I don't recommend scalping or even day trading for anyone whatsoever. You could lose a ridiculous amount of time, money in a very short amount of time, okay? You need to be very well versed with being able to play higher time frames before you can even come close to making on-the-fly decisions on very low time frames, okay? So please give trading on higher time frames a shot first, where you'll find more confirmation there before you actually look on, say, like the 1 hour time frames and below, which will give you a much more detailed picture. But because it gives you a more detailed picture, it also requires you to make much quicker decisions on the fly. So your TA skills need to be on point, guys. They need to be on fleek. Is that even a word you can say? Yeah, your TA needs to be on fleek, guys. Otherwise, you're not going to succeed as a day trader. Trust me, you're competing against very talented day traders, and we have to keep in mind that trading is nothing more than a freaking competition against each other, right? We're all at each other's money. We're all after each other's money. So there's a lot of risk in day trading as well. Not to say that there's a lot of risk in swing trading. Of course, there's always risk associated with putting money on the line, right? But without risk, there's no possibility of reward. So what we try to do is we have to make sure that we time our entries and our exits very, very specifically. So that's all I kind of have to say for this, guys. I might make another video down the road. I think that it's important for people to just exercise, to participate by learning rather than just observing, right? You guys need to constantly scroll back and forth to all these different time frames to see what you're noticing. Play I Spy with my little eye. Just keep looking out on the 2 hour chart, then move up and down and just try to call out everything that's going on and try to narrate it even to yourself or in your head. Because these candles, guys, on every single time frame right now, they all tell a different story, but they all give one big story at the end as well to give you the big picture. Now, it is up to you how to discern this information and how to digest it. Nobody can teach you guys how to process information. All that we can do is try to give you a little bit of a tidbit on it, right? So it's very critically thinking, if that's what you want to call it. So I think that learning how to use time frames, it's the very critical thinking skill that everybody needs to develop, and everyone will develop it slowly over time at their own pace. So, I see right now on a 2 hour, I see a big uptrend right now in a consolidation. On a 1 hour right here, I see more consolidation. If I go to 5 minute, I'll see the entire consolidation and how it's happening over here. So it just depends on what style you want to be once again. Okay, guys, I know I've said this like 100 times, but I feel like I've got to repeat it because it's a very important topic to remember, right? And it's very important that we all know that we all take profits differently. We all take profits at different times because we all have different personalities and we all believe in different things, that it'll either go up and down, and that's what drives the market, supply and demand. It is all psychology and human behavior. So over the time frames, it gives you the psychology of the entire coin and what's going on in that specific market. Now, 1 minute time frames may not be able to tell you a lot, but 2 hour time frames will give you an overall idea of what everything is going through, right? So yeah, that's it. If you guys enjoy my videos, I would really appreciate an upvote on Steemit. Make sure you guys also like, subscribe, and share to all the content on social media. Other than that, I really appreciate all your time, and thank you very much for the support, guys. I'll see you later.